So I'm here to talk to you about tax planning opportunities for 2011. And as we all know, there's a lot of uncertainty about where the current administration wants to take tax policy, what the rates will be in the future. But what we do know is this: in 2011 and 2012, we know what the tax rates will be. The current rates will expire on January 1st, 2013. We don't anticipate any changes to the 2011 rates, at least until after the election in 2012. And at that point, we'll have probably new rates and new policy, and we'll make planning opportunities then. But for now, let's talk about what things businesses can do between now and year end to save money on their taxes. The first thing taxpayers or businesses ought to consider is taking bonus depreciation. What bonus depreciation allows you to do for assets purchased in 2011, taxpayers can expense the cost of eligible property. They can expense 100% of the cost rather than depreciate it. They can expense the entire amount in 2011. So it's important to go back and look at your assets that you've acquired and see whether they're eligible for the 100% bonus depreciation. In 2012, that deduction is at 50% of the cost. So if you're on the fence about what year to purchase, you may want to consider accelerating some of your purchases into 2011 where they're eligible for the 100% deduction. Also, if you've acquired or constructed new office space, or you've built a new warehouse, you might want to consider a cost segregation study. What a cost segregation study will allow you to do is accelerate some of the components into shorter lives, and so this can be very useful, accelerating depreciation deductions. All right, another area that we're advising taxpayers to take advantage of is the domestic production activities deduction. This allows taxpayers that manufacture, produce, grow, or extract activities in the U.S. a special 9% deduction of their qualifying income. This is a permanent difference, and taxpayers need to take advantage of this. So if you perform construction services, engineering services, production, you're a manufacturer, an architect, or a software developer, you're eligible for this 9% deduction. This can be significant savings depending on your level of activity. S corporations that were formerly C corporations are subject to a built-in gain tax if they sell certain assets in the first 10 years of existence. Well, for 2011, the IRS has shortened that period to 5 years. So if your company is more than 5 years old, it's now time for you to dispose of these assets without triggering any additional taxes. So if you're an S corporation, take a look and see if you're eligible for this special provision. Another thing that taxpayers that is new for 2011 is if you've bought or acquired a trade or business, certain transaction costs are now eligible to be deducted. The service in past years has required you to do painstaking record keeping to determine how much of these costs are eligible for deduction. Well, they've come out with success-based fee election, which allows taxpayers to deduct 70% of all success-based fees for eligible acquisitions. This is significant savings or significant opportunity. An election has to be made, and if you've bought or sold a business or acquired a business in 2011, you ought to take advantage of this special provision.